The 2024 Finance Bill's proposed motor vehicle circulation tax continues to elicit mixed reactions across the country. The tax is expected to increase the cost of owning and operating a vehicle in Kenya. And as Muse takes up the story, he looks at the potential impact of tax and what alternatives exist.
The National Assembly Finance Committee, chaired by Kimani Kuria, defended the motor vehicle tax introduced in the Finance Bill 2024, terming it an attempt to boost revenue for development and growth of the transport sector. The bill proposes a motor vehicle tax to be charged at 2.5% of the value of the vehicle annually. The tax is to be capped at a minimum of 5,000 shillings and a maximum of 100,000 shillings. However, industry players such as insurance intermediaries claim that creators of the bill have neglected key factors such as income growth in the economy. The association is worried that comprehensive policyholders will opt for cheaper third-party covers.
Now, when we have the state trying to introduce a 2.5% of the value of the vehicle as a amount to be paid every year for the value of the car, and already our clients are already seeing that this is a burden that has really affected them, then there's nothing positive you can expect as far as this motor vehicle circulation tax is concerned.
Car sellers are concerned that the new tax may lead to reduced sales. Lepilal Somoine, who sells foreign used cars, says the middle-class buyers may shy away from buying expensive vehicles to reduce the burden of paying more taxes at the moment of insurance renewal.
For a citizen who will buy this 2020 GLE, it will be more expensive for them to, a 2020 GLE is from around 18 million. Do 2.5% of 18 million. Do insurance is between 3.5 to 7%. Add on top of it. So you'll realize that Kenyans that wanted to buy a GLE, a Range Rover, all those luxury vehicles, will consider to buy more affordable vehicles.
Business analyst Mir Takar believes the tax will have a major negative impact on most players directly involved in the motor industry. He suggests exempting commercial vehicles, electric and locally assembled vehicles to encourage local production and boost e-mobility.
One of the ways in which it can perhaps be watered down is to exclude commercial vehicles from it. Of course, this would be a very wide-ranging category, and it would be prone to abuse. Two other categories that can be excluded from this tax in order to, drive uptake of vehicles in these categories is electric vehicles and locally assembled vehicles.
As public participation on the bill continues, this is what different Kenyans had to say.
Wasiongeze mwananchi ushuru. Hata hiyo kitu angari, si kwa nini walirudisha tena? Hiyo kitu kuanga miaka yote.
For it's not a crime to own a car or a matatu or any other thing. So I suggest that it should not be passed.
Most of the car owners in Kenya, we know very well, they acquire these cars through bank financing. So additional taxes to that, I think it is a burden.
Most Kenyans have different views on the proposed motor vehicle tax. Let's wait and see how this will unfold. Reporting for Prime Edition, I'm Ian Muse.